real body that gets deeply into the black candle. Now, notice how the black real body, where the black real body closes and the white real body opens, it's going to be the same. So what are the, beside a morning star, what are the last two candlestick lines forming? Bullish engulfing pattern, exactly. The main thing is, though, for morning star, in addition to also being a bullish engulfing pattern, it has to close above the middle of the black real body. This is what the morning star is going to look like in the Forex market. Okay. So here, there's a morning star. And why is there support there at that morning star? Where's that dotted red line come from? Previous support formed by what? A bullish engulfing pattern, yeah. Right. And you can see that that's a bullish engulfing pattern. That would not, if the black real body of that bullish engulfing pattern was small, okay, would that then be, that three candlestick lines be a morning star? Did the white candle get deeply into the black candle enough? Okay. Okay. So I'm talking about over here. So let's imagine this is a small real body. Remember, you need a small real body to be a morning star. So let's imagine this is a small real body like this. Right. Then this white candle really has to get more deeply into the black candle to be a morning star. Yes?
The morning star, is lower shadow doesn't matter?
No. The question is, in the morning star, does the shadows matter? No. Nope. And you could use the low. I'm sorry. What's that? You could use the lower shadow. The lowest shadow of those three candlestick lines as your support level. That's true with pretty much all the candlestick signals. If three candlestick signals make up the pattern, use the highest or the lowest of those three candlestick signals. So the morning star is the three candlestick signal. You take the lowest low. The bullish engulfing pattern is a double candlestick signal. You take the lowest low of those two candlestick lines, the shadows, and that becomes your support level. Okay, here we have the evening star. Non-4x, white candle, real body, black or white, that doesn't touch the white, ideally it doesn't touch the white real body, and then a black candle that gets deeply into the white candle. Now, many of the candlestick signals, I talked about, be careful about some of the stuff you read about candlesticks. It's just not true. Like, I've seen ads, candlesticks, been around 300 or 400 years. That's not true. The candlesticks, as far as my research is concerned, really started when the equity market began trading in Japan in the 1870s. Before then, the Japanese really used the psychology of the market. And what they've done is, a lot of it is clouded in mystery. There's no definite answers. But from my research, what I've seen the Japanese have done to evolve the candles is they've taken their understanding of psychology and shifted into a candlestick pattern that reflects the psychological aspect of the market. So, for example, I had a book translated that was written in the mid-1700s, a Japanese book, and they talked about, in candlesticks actually, in Japanese, yang is they call it a yang candle and a yin candle. Yang is a bullish candle, yin is a bearish candle. And in the literature, this was pre-candles, this was in the 1700s, it says when yang reaches an extreme, there is stillness. This stillness gives rise to yin. That's the bearish engulfing pattern. White candle, when yang reaches an extreme, gives rise to stillness, the spinning top, and that stillness can give rise to yin. That's that black candle. So this is a non-4x, and here we have a 4x. Okay, because the opening and closing are the same. On that second candle line, it's almost always going to be white. Now, you may have an occasion where that second candle opens a pip or two above the close of the first white candle, so it may actually be a black real body, but almost always white and doji. So let's look at some examples to make it a little easier to see. So this is an evening star. Here's another one. And see, this is a little unusual because that evening star, normally that second real body and that red semicircle, the second real body is usually white. But in this case, it opened a couple of pips above the prior close, so that's why you have a black real body. Yes?
Wouldn't that second red top be a spinning top?
Yes, the second one would also be a spinning top. What else is it also? The second part of that evening star. Remember the single candlestick lines we talked about? Shooting star, right? And why was there resistance there? Bearish engulfing pattern, right? Exactly.
Can you go back to that first one? Didn't go halfway into the...
Right, it did not, that black real body in the blue semicircle area, see that black candle, that's what that blue horizontal line is, to show halfway into the white candle. Ideally, we want to see it close, that black real body close halfway or lower into the white candle. And that's what the blue horizontal line is about. It shows us it didn't close.
That's really close.
Yeah, it's real. I mean, right. If you don't want to be, and you could also view it maybe as a bearish engulfing pattern, right?
Yeah.
So if you did sell on this, let's say you sold short, it's confirming a resistance area, and you sold on this, as soon as the market closed above it, if you're short, you're wrong. Right. Okay, here it did close under the middle of the white candle, but getting back to how, even if it didn't close under the middle of the white candle, wouldn't that be a bearish engulfing pattern? Right? The black candle wrapped around. Remember, with the Forex, even if a black candle wraps around doji, it's still a bearish engulfing pattern. So that would be a bearish engulfing pattern, and it would have more negative implication as the resistance area if it also closed below the middle of the white candle. Because sometimes the middle of the white candle becomes support. As I mentioned before, it's not a major support area, but it's support. Question? The question is, if it breaks above the resistance area set by any of these candlestick signals, evening star, dark cloud cover, bearish engulfing pattern, do you go right into it? And the answer to that is you have to show me the chart. You have to see what the support level potentially is, what your target is.
Do you attach any strength to this break cord? There may be support and resistance levels. Like, suppose, for example, evening star is broken above.
Right.
And then there may be a resistance level there, but if the strength of the move is such that it will break that.
Okay, he's saying if it breaks above the high of the evening star's resistance, and let's say there's another resistance area right above that, there's no way to know if the market's going to take that second resistance area out. Okay, I can tell you where support and resistance is. In fact, that's what we do with our daily commentary, both our retail daily commentary and our institutional daily commentary. We'll give 3 levels of support and resistance. And the reason for that is because there's no way of knowing if the market's going to break support or resistance. But if it does break, let's say, a resistance area, I could tell you the next resistance area, and that would mean keep an eye out for any potential reversal signals with candles. But you can't tell how much the market's going to move by knowing what kind of candlestick signal it broke through.
Can I ask differently?
Okay, go ahead.
How much importance do you attach to breaking a reversal pattern?
How much importance do I place on breaking a reversal pattern? It depends on how often that reversal pattern was tested. If it was tested a lot of times, let's say a hammer was tested a few times, and the market breaks that support area, I would place a lot more emphasis on that. We'll look at old support becoming resistance than I would be if the market broke under a hammer support one time. So if it's tested more often, a break is more important. Yes?
But on this chart here, then you would have said your resistance is at the top of the bearish engulfing.
Exactly. Right.
And you would have been taken out
No.
at that wide white candle.
Remember, when we talk about resistance, is the resistance based on an intraday move or a close? Close. So the market moved above the high of that upper shadow on that black candle, the bearish engulfing pattern, but didn't close above it. Right, didn't close above it.
But it might potentially